Let's dive into Biogen, one of biotech's most recognizable names, now facing some serious headwinds. Since mid-November 2024, Biogen's stock has dropped nearly 25%, far worse than broader biotech and market benchmarks. Zoom out to 2 years, and the picture gets even starker. Biogen lost over 57%, while the S&P 500 gained around 40%. But there's a glimmer of hope. Signs of base building have emerged since February 2025. Consensus forecasts have finally stabilized after 2 years of cuts, and key assets like Leqembi, Skyclarys, Zurzuvae, and Qalsody are rolling out, setting the stage for gradual recovery. Right now, earnings growth depends more on cost discipline than revenue expansion, a tough spot for a growth-focused biotech. Of course, risks remain on the table. Weak sales momentum, deeper multiple sclerosis erosion, and slow adoption of new therapies all threaten Biogen's recovery path. Welcome to the Biotech Capital Compass, your guide to navigating the fast-moving world of biotech investing. Biogen's journey ahead is uncertain, like a winding path through an open field, with multiple directions and no clear destination yet. This newsletter delivers sharp analysis and actionable strategies for active investors, swing traders, and anyone fascinated by biotech breakthroughs. The author, Hartaj Singh, brings over 30 years of experience in drug development, corporate strategy, hedge fund management, and biotech analysis. We're revisiting Biogen, an original biotech stalwart and neuroscience leader, first spotlighted back in November 2024. Back then, the take was clear. Biogen stock may appeal to investors with a longer time horizon, who are willing to build positions gradually. Since November, Biogen dropped nearly 25%, more than double the decline in the Nasdaq Biotech Index. That 2-year loss of 57% stands in stark contrast to the positive performance of broader markets, reflecting deep investor frustration. Still, the stock has flattened since April, while peers rebounded modestly, hinting that capitulation may have occurred. Biogen's recent rebound tracks the broader biotech and equity market recovery, suggesting it's riding market sentiment more than company-specific momentum. Management's focus has zeroed in on 4 pivotal product launches that could shift the company from legacy erosion to new growth. Leqembi for Alzheimer's, Skyclarys for Friedreich's ataxia, Zurzuvae for postpartum depression, and Qalsody for ALS, all first-in-class therapies, are central to Biogen's launch execution strategy. Biogen has streamlined R&D by cutting duplicative programs, made small, high-conviction acquisitions like HiBio and Stoke, and built a more diversified pipeline in Alzheimer's, immunology, and rare kidney diseases. The Fit for Growth initiative squeezes legacy costs to free up cash for selective innovation bets. Analysts remain cautiously constructive, watching for catalysts that could accelerate adoption and validate the pipeline. FDA approval of subcutaneous Leqembi dosing and blood-based diagnostics could both accelerate Alzheimer's drug adoption. The big question is whether gains from the lupus and nephrology pipeline can offset multiple sclerosis losses before the gap widens further. For the rest of 2025, analysts see limited upside, with immediate challenges weighing on revenue and new product uptake. The legacy multiple sclerosis franchise keeps eroding, accelerated by biosimilar competition, which pressures Biogen's core revenue base. Reimbursement hurdles and logistics challenges explain why Leqembi and Skyclarys are ramping slowly in the US and Europe. Looking ahead to 2025 and 2026, structural improvements and pipeline diversification offer a more optimistic outlook. Subcutaneous Leqembi enables easier dosing, which should drive increased usage starting in late 2025. Broader use of blood-based Alzheimer's diagnostics makes patient identification easier, expanding the eligible treatment pool. Skyclarys, Spinraza, and other rare disease assets are expected to drive steady growth, forming a unified rare disease franchise. Immunology and nephrology pipeline programs like felzartamab and litifilimab could unlock additional value from 2026 onward. The story hinges on operational follow-through, delivering cost savings, executing launches, and adding selective pipeline assets. Let's look at how Biogen's share price has tracked analyst consensus estimates over time. Since late 2022, Biogen's share price has systematically followed the steady decline in sell-side consensus for both adjusted EPS and total revenue. Periods of relative price stability in mid-2023 and after February 2025 line up closely with points where estimate downgrades paused. This is the classic kitchen sink reset for a mature biotech working to right-size its cost base and refocus capital. After a 2-year slide, consensus for 2025 through 2029 has stabilized, suggesting the market sees MS erosion and Leqembi uncertainty as largely priced in. Revenue expectations remain flat around $9 billion through the decade, while EPS shows mild recovery driven more by cost-cutting than sales expansion. Investors pay premium multiples for credible revenue expansion in biotech, but Biogen's flat revenue outlook caps valuation re-rating potential. Biogen's growth strategy rests on 3 pillars: the Alzheimer's franchise, the rare disease base, and immunology bets. Major phase 3 readouts and regulatory inflection points aren't expected until 2026, so investors need patience. Successful pipeline execution must generate fresh catalysts to reignite genuine revenue growth and support a durable stock re-rating. Patient long-term investors may start to revisit this biotech bellwether, though for most, it remains a wait-and-see story for now.